Hello, dear traders. I'm happy to welcome you on our first webinar with Alexander this year. So a lot of things happening on the market. So every time it's interesting to hear Alexander's opinion, to learn a lot from his market overview, from his advices. And yeah, before we start, I will say some words about our company, about agenda for today's webinar, and then already we will start. And as usual, before each webinar, what we do is we are warning you about risk, because we need to understand that trading and investing, it involves risk, and you need to understand how to work with this. And also we cover this topic during our webinars, not like in the whole way, but we try to also explain how to do proper money management and how to manage your positions. For those who are participating for the first time in our webinars, I will say some words about our company. We are a brokerage company. We are working in different countries, and our main services we provide to our clients is trading and investing. So you can trade with leverage, you can invest in different instruments like stocks, ETFs. We also cover more than 8,000 instruments, and we provide platform MT4, MetaTrader 4, and MetaTrader 5. So everything in one place, so you can choose what is more profitable for you. Also, I want to say some words about our channels, where we also produce different content for education, because we pay a lot of attention to education for our clients. And here I want to say that we have a YouTube channel. So we upload this video to this YouTube channel, and after this, on this recording, we will have a contest, so where you can win a book with Dr.Elder's signature. So I will share links to our channels, and I want to encourage you to subscribe, because next time, if you didn't have chance to participate in our event like online, you can watch it later on our YouTube channel. And also we use a Telegram channel, so there we will share also recording. And if you want to be notified about our events, I also want to encourage you to subscribe to our channel and be informed about all our events which we produce, and participate on those you are interested. So for today, as usual, we will go through some main markets like SP500, like DAX 40, EURUSD, Gold, BRENT. As what we do is usual, just to get the more or less full picture what's happening on the markets. I also asked Alexander to share his thoughts about the beginning of this year, and Alexander will share some thoughts about S&P 500. Also, we have a contest what was announced like previously, and we announced a winner, and also go to a short review of those positions which were suggested. And in the end of this webinar, I also explain how to use Alexander's indicators in MT5 platform, and also I will explain contest rules, where, as I told, you can win a book with Dr.Elder's signature. So I think we are waiting a lot like for this webinar. So I'm happy to have this first webinar this year. And every time I'm so excited to have this session. So Alexander, I will pass the microphone to you. The floor is yours.
Thank you very much. Floor, ceiling, and even you see a tube behind me. That's from my fireplace. Thank you very much for inviting me again. You know, I think that we may have some people here who haven't heard or who don't know why I'm here. You know. Maybe you just picked up some random guy from the street and said, you know, put on a shirt and tie and talk about the markets. Well, for those who haven't heard why I got invited, I wrote, so I'm a professional trader. I mean, that's what I do. I sit in front of the screen and trade. But in addition to that, in earlier years, I wrote several books, including the book which became the international bestseller for traders, The New Trading for a Living, translated into 17 languages. Lithuanian was the last. It's all over Asia and Europe and whatnot. I see somebody is asking, in what big bank did you work? I never worked in a bank. I went to a medical school at age 16. At age 22, I was qualified as a doctor, and I became a psychiatrist, and I taught at Columbia University. But strange thing is, I came from a family where many men had two professions. So when I was in my late 30s, I became very interested in trading, and I got into trading, and eventually I began doing it full time. Dear doctor, today is FOMC soon. Do you expect a rate hike announcement causing the Dow to drop heavily, or at least revisit the recent low from? Well, you know what? Instead of reading questions, I should really begin by talking about current markets. Yes, today's FOMC, the Federal Reserve is having a meeting, and they will announce the results, I think, at 2 o'clock, which we can expect the markets to jump as they often do. But let's instead of sitting here and kind of twiddling our thumbs which way it's going to go, let's look at the current markets and discuss what's happening. What I would like to do, actually, Roman, if you don't mind, I'll share a screen. There's just one slide I want to show. Okay with you?
Yes, sure.
Okay, continue, and where is it? Okay, here. Share. So I took this chart from the Wall Street Journal, the chart that you see here in the middle, and I just added some numbers and arrows to it, and the picture of an elephant, because the Federal Reserve is really an elephant in the room. And this is really the chart that helps me most of all decide what to expect during this coming year. You see what this chart shows, this blue field here. This is the assets of Federal Reserve. Federal Reserve puts money into the financial system. They just create that money out of thin air. They have a monopoly for that, but they're fairly conservative. So they know if they create too much money, we're going to have inflation, and if they create too little money, we're going to have a recession. So the Fed has to walk a fairly narrow line. They're responsible people, and they walk a pretty narrow line. Helping the law says they have to help the country grow and maintain as full employment as possible, and monetary stability. So that's what they have to do by law, and then they dance sort of there in the middle. So if we take this chart from left to right, on the left, 2011. So this is still after the world financial crisis, and you can see what Fed was doing. It was pumping money into the economy. It went from less than $2.5 trillion to 4.5, almost doubled it. How do they do? So they create money out of thin air, and then they go to the banks. Well, they don't go to the banks. Banks come to them and stand on their knees. But they go to the banks and they buy financial paper from banks. They buy all kinds of interest-bearing paper, and by buying that paper, they put money into the bank's hands. And then, of course, banks are supposed to lend this money to real economy, but the real economy is a complicated thing. It's much easier to throw money into the stock market. So when the Fed starts buying that paper and putting money into the banks, stock market goes up. And it was going up until 2014. In 2015, the Fed said, you know, we're out of financial crisis, and they became completely stable at 0.1. And the bull market at this point ended. That was the last year of Obama presidency. Then Mr. Trump comes in. The market gets very happy and starts going up again. And at point 2, that was 2018, the Fed started reducing their assets. The Fed started selling paper instead of buying it. When they sell paper, they suck money out of the economy. And that's what they were, but the market adjusted. The economy was very strong. The market continued going up. And then you see this green arrow here. This was March 2020. The pandemic exploded. And there was a fear that the economy will just seize, collapse. And so the Fed shoved huge amounts of money into the market. So the federal balance, federal assets went from approximately $4 trillion to $8 trillion. And this what drove this bull market. The two main factors driving the bull market were the money from the Federal Reserve and new money coming in, people like you, people who just discovered the stock market, and they say, well, it always goes up. It's been going up for 6 months, 12 months, 18 months. It's only going up, and so people are buying stocks. And so that's the bull market of 20 to 21. In November of last year, the chairman of the Federal Reserve was reappointed by current President Biden. And as soon as he got reappointed, he said, you know what, we have an inflation problem. We didn't have it before he got reappointed, but as soon as he got reappointed, he discovered we have an inflation problem. And he said, A, we stopped pushing money into the economy. We're going to stop this program in March of, very soon, in March of 2022. And then he says, we're going to start raising interest rates, and we're going to do it 3 times in 2022. But the most important thing, they're going to start selling their assets. They want to bring them from $8 trillion somewhere closer to 4. And when they start selling, so buying those assets, putting money into the banks, created a bull market, and now they're going to suck this money back in. What do you think it calls for? I see a bear market here. The fuel, instead of fuel being added to the markets, fuel being sucked out of the markets. So that's why, looking forward to 2022, I see essentially a bearish market. Now, it's not going to go in a straight line. Markets never do. So the markets go up and the markets go down, but the general overall trend, I expect this year to be down. Roman, that's a hugely important chart I wanted to share with our participants. And now, if you like, take the control back to yourself, put up your Admiral software, and let's review the key markets, see what they're telling us.
Do you see my screen?
Yeah, fantastic. So this is how, just one second, I have to write a little note to myself. So this is how I like to look at the markets, at any market. I want to look at least 2 time frames. More if I want to time a trade for precision timing, I use short-term charts. But for deciding what to buy and what to sell, this is a setup I use. And so that's why Admiral has the software. So the always weekly chart on the left, daily chart on the right. Why? Because I will make my strategic decision on the weekly chart. The weekly chart helps me decide to be a bull or to be a bear. And then I use the daily chart for decisions, how to, where to enter and where to exit. So we begin with the left chart. What you can see here is that approaching the right end, there was a huge bearish divergence. Roman, if you draw a line across the, let's say, across the November peak, a little bit to the left, more, yeah, a little bit more, one more bar to the left. Yeah, across this peak. Horizontal bar, please, across the peak, horizontal.
Just a second.
I became hugely bearish towards the end of December of last year because the market broke out to a new high. And at the same time, if you look at MACD histogram in the middle panel, at MACD lines, you can see a real bearish divergence there. You can see that MACD is an indicator which measures the power of bulls and bears. Look in springtime, February, March, how strong bulls were. And now there was a severe break in summer. And then MACD histogram rises up again, September, October. And you can see tremendous weakness. MACD lines, same thing, downward divergence. So I was very bearish and I was actually heavily shorting this market. And I don't like holding shorts for a long time. I go short, and I usually like to cover those positions by Friday, not to carry them over the weekend, not to be exposed to big surprises. Commissions are cheap, and you exit on Friday, re-enter again on Monday if you still like the trade. Looking at the daily chart of the S&P on the right, you can see that this final break to the upside in December, and again it's a false breakout. At the left side of the daily chart, look how high MACD histogram is. Under the new record peak, you see how weak MACD histogram is, and that's a bearish divergence. For divergence to be legitimate, the two peaks have to be separated by a break of the central line, and of course we got a break of the central line here. And then the fun began. The market began to fall, and it closed very weak last Friday. And so when I saw a very weak Friday closing, I actually took half of my shorts over the weekend, because a weak Friday close usually says, you know, people who don't watch the markets, people who read their newspapers on a weekend, they're going to panic over the weekend, and Monday is going to be weak. Well, we certainly got a very weak Monday. Yesterday, Tuesday, was a second test of the lows, and today the market is rallying very strongly. So that's the S&P. The key question we have here is this the end of a correction? Is the bull market is going to be alive and well, or is this rally going to just take the pressure off of the market? Market became very oversold, and after this rally, we have a new drop to a new low. Well, in terms of short term, Roman, if you could scroll the screen or compress the screen, I want to see September on the daily chart. Right. Oh, perfect. You see this bottom in September, October. Look at the shape of this bottom. First, there was a severe drop, just like single bar, a rally, and then another slow decline, retesting the first bottom, and then the big rally started. I do expect something like this now. We had this tremendous stab to the downside. Now the rally began, and I think this rally may well reach into the value zone. The value zone is the zone between the two moving averages. And then I think this bottom wants to be retested. If the bottom holds, we may have a couple of months of positive action. If not, I don't anticipate this market eventually to approach to the 2021 lows. So what we're seeing now, what we're having today, is a rally in a bear market, basically. But those rallies can be very sharp. It is certainly very sharp today. So that's the S&P.
Let's look at DAX 40.
you know, the pattern you see at the right edge of the weekly chart of the DAX. And by the way, in the DAX, you also see this beautiful false upside breakouts. The peak of power in the DAX was in February, and then one false breakout, second false breakout. We had this webinar earlier, and if memory serves right, I was saying I'm bearish on the DAX. At the right edge of the screen, we see a pattern that I call a kangaroo tail. A kangaroo tail is, you can see a beautiful example of a kangaroo tail, let's say on this weekly chart, if you go approximately to May of 2021, prices are further back, before that, Roman, before, about 10 bars before. Okay, that's it. So you can see how prices are kind of in a tight formation, severe stab to the downside, and immediately recoil. So it shows, this kind of kangaroo tail shows that the market explored one direction, did not like it, and then pushed in the opposite direction higher. By the way, if you go to the very left of this chart, third bar from the left, you can see a kangaroo tail to the upside. There is a kangaroo tail immediately followed by a break. So I call this pattern kangaroo tails because kangaroo jumps away from its tail. It doesn't go back, it jumps away from the tail. So of course we're having a very, very impressive kangaroo tail developing on the chart of the DAX today, which makes me think the DAX has a nice little rally ahead. I doubt that rally will go to a new high. I think it's going to be another pressure reducing rally, and then the downtrend will begin again. But in the short run, if somebody said to me, Alex, you have to trade the DAX today, I would buy it immediately without thinking much. I don't now. I also want to say, when I express such things, I'm not telling you what to do, to buy or to sell. I cannot possibly give you advice because I don't know you personally. I don't know your financial situation. I don't know your risk tolerance. So I cannot tell you what to do. It would be just idiotic giving advice to strangers. But I figure you deserve my clear, honest opinion. So what I do is think out loud when talking about these charts. The euro, and as now you know, weekly on the left, daily on the right. So the euro was getting weaker and weaker and weaker on the weekly chart, and in the middle of the chart you can see a bearish divergence of an ACD histogram, one of my favorite market indicators. Between the tops, a massive top on the left, and then two little tops in the middle, which basically showed how euro was becoming weaker at that time. That was in 2020. And then the downtrend began. And I remember in this webinars, we were watching this downtrend, and we had a webinar right around this bottom, I think, what was it, 2 months ago. And I don't watch the euro very closely, but I said I'm bullish on euro, and the euro went up very nicely. On the daily chart, it's having a pullback right now, but I think euro has formed a bottom, and basically it wants to go higher. You can see how the histogram is at a pretty extreme point on the daily chart, really looking like it wants to turn. And, most traders trade history. They see something that happened on the chart and they say, well, whatever happened yesterday or last week or last month is going to continue. Sometimes it does, but often it doesn't. So I prefer to be a reversal trader. I do expect a continuation of that trend.
Okay, let's also look at gold.
Well, I became hugely bullish on gold when I saw this kangaroo tail. I mean, this kangaroo tail that happened last year. Of course, that's a fantastic kangaroo tail. It's bigger and better than ever. I was buying gold. I began buying gold stocks, and I made some money on them. But then I just got bored with this long, flat trading range. But now the bulls are back. You can see a slow rise on the weekly chart and a slow rise on the daily chart. And these are much better. A slow rise is much better than a fast rise, because fast rise is a panic. Slow rise is serious business. So gold is asking to be bought. These charts suggest how to go about buying it. Now, if you're a long-term position holder, of course, just buy and hold. But if you're a trader, which what I do, here is my system in situations like that. Look at it. So the trend is up. Trend is up on the weekly. Trend is up on the daily. Look at the daily chart. Look at the daily chart of gold. And what you see on this chart, and again, that's software available from Admirals. There are two moving averages. One is fast, another is slow. And I call the area between those moving averages the value zone. Fast moving average shows you public consensus over a short period of time, the red line. Slow moving average, the blue line, shows you public consensus over a longer period of time. And the value lives somewhere between those two lines. And then there's an envelope on this chart, an auto envelope that is designed to contain approximately 95% of all data, 2 standard deviations. So the time to buy is when gold returns into its value zone, and the time to sell is when it starts approaching its upper channel line. And so as of today, the value zone begins somewhere below 1830. The upper channel line is somewhere around 1860. $30, that's not a bad deal. $30 in futures is $3,000 per one contract. But I wouldn't even try to get the whole thing. I think if I can catch half of that distance, I would be very happy with my performance. They say bulls make money, bears make money, pigs get slaughtered. So let's not be pigs on the market. Grab a comfortable piece, step back. Let's go.
Thank you, Alexander. And last but not least, let's look at oil. Here's Brent.
Well, oil is the lifeblood of the economy, and what it seems to be saying is that it expects the economy to get better, even better. The economy is in a fantastic shape in the United States. Unemployment is at a record low. We're having actually supply chain issues. People cannot get materials that they want because the demand is so high, and economy is disrupted worldwide. Communications, shipping is disrupted worldwide because of this pandemic crisis. So oil is up, but before we begin celebrating, I want to draw your attention to a potential, not actual, but a potential bearish divergence on the weekly chart. And I can see Roman already moving his cursor. You see the peak in September and the height of a MACD histogram, and you see the current peak. It has to continue to rise. Because if it doesn't continue to rise and ticks down this week or next week, MACD histogram is likely to tick down, creating a bearish divergence with a false breakout. So it's really at the decision point here. for myself, when I go shopping for stocks, I don't like buying them high. If you look at the daily chart of crude, of Brent oil, it does look dangerous. You see how today it's broke out above the previous peak. MACD histogram is declining, force index is declining. I would like to know, I will know tomorrow whether this breakout holds or whether this breakout has faded and came back into the range. I'm very suspicious that the top is being drawn here. But in any case, about buying. I'm a discretionary trader. You know, there are systematic traders who have computerized sets of rules, and they're discretionary traders. I'm a discretionary trader, but at the higher end of performance, I find that discretionary and systematic traders become quite similar to each other in many ways. So I decide, just analyzing a chart, whether I trade it or not. But I have certain systematic firm rules. And one of those rules is I never buy near the upper channel line. I never sell short near the lower channel line. Because those channel lines, you saw like what Roman was showing a second ago, this oil touching the bottom channel. No matter how bearish you are, not allowed to sell short there. Same thing at the right edge. It's at the upper end of the channel, upper line of the channel. No matter how bullish you are on the right, not allowed to sell it short. To buy it, I'm sorry. And not allowed to sell it short either because the impulse system is green. I don't know if you're familiar with the impulse system. It's certainly in my book, one of the great discoveries I made and shared. The impulse system is a censorship system. It tells you what you're allowed to do, what you're not allowed to do. With the impulse system is green, as you can see here, prohibited from selling short. And it will stop being green if MACD histogram ticks down. So oil is really at the razor's edge. It's bullish today. If somebody held a gun to my head and said, Alex, you have to trade gold today, I'd have to buy it. But I would not, you know, without a gun, I'm not buying it. I'm waiting. And I think what I'm waiting for is a reversal. Very careful, very cautious. Okay.
Thank you, Alexander. Thank you for your main markets overview. And to continue, I suggest to go through two trades which were offered for our contest. One is profitable and one is not. So just to hear maybe some, again, like some thoughts according to those two positions, I will share my screen.
Roman, by the way, I don't think you've sent me those tickers, no? In any case, doesn't matter. We'll look at them together now.
Yep. So here is Adobe company, and I already put it like these trades on your system. So here was entry. It was long position. So here was stop loss, and here is take profit. So this was not profitable trade.
You know, sorry to interrupt you. You know, I look at it just on the weekly chart, and this is what I call an illegal trade. Illegal trade. The impulse system is red. You cannot buy. You see, and this is the great value of the impulse system. You know, I've heard some people kind of, you know, at a trade show, expo, dancing. Green means buy, red means sell. Green means buy, red means sell. You know, doing this little dance. It's garbage. It's nonsense. This is not a trading system. It's a censorship system. It tells you red, not allowed to buy. Green, not allowed to sell short. So I can be very bullish, and I'm just sitting there and waiting for that color to change, and then I go. So be prepared, analyze. But this was an illegal trade, and the person who did it paid for the consequences. Also, this trade shows a super powerful shorting signal a few weeks earlier. Look at this double top. look at the double top in Adobe. The second top was a false upside breakout. It broke. What do you mean by false upside breakout? It broke above the first top and it could not stay there. It just couldn't hold. And look at the height of a MACD histogram at the first top and at the second top. I mean, this is one of the best bearish divergences I've seen in a while. I mean, to me, I almost feel like a hand comes on the screen and grabs me by the face and says, Alex, sell it short. If you don't sell this short, what are you going to short? This is it. So this is the tremendous shorting opportunity, and stop it. Stepping in the middle of it to buy, it's just not a good idea. And again, look, I don't know who's done it. I'm not saying it to the person as a criticism. It's a mistake. I made huge quantity of mistakes when I was learning to trade. I mean, how do you think I learned this thing? By being born smart? No, by losing money and learning, losing money and learning. So this is a great shorting setup, and the impulse system is read. Not allowed to buy. Not allowed to buy here. It's there is a very nice book, One Up on Wall Street, by this guy Peter Lynch. He was a very, very successful money manager in America, maybe 20 years ago. He made serious money, retired, wrote a couple of books after he retired, and he is now big time doing Catholic charities. But in any case, he writes in his book, trying to catch a bottom, which is what this guy did on Adobe, right? Adobe is falling, he's buying a falling stock. Trying to catch a bottom. It's like trying to catch a falling knife. You always grab it in the wrong spot. Don't try to catch a falling knife. Pick it up from the bottom when it stops vibrating. In any case, end of lecture.
Thank you. And let's look at another stock. It's Verizon, and here was short suggested. So here was entry, here was stop loss, and here is taper. So position is still open, like according to the suggestions. So yeah.
Very nice, very nice. You can look. Verizon is a big communications company in America. It's a cell phone company primarily. I think it's second biggest in the country. Actually, I have Verizon service on my phone. But the stock is in a downtrend. You see, top, bottom. Bottom, lower top, lower bottom, another lower top where this guy enters the trade. So you see, there's a very well established trend and very smart entry. Buy low, sell high. So for a short trade, he's shorting it high. The rally is choking up, and it rallied for 1 week above the value zone, begins to choke up, and that's where he's shorting this thing. Very well. Look, I'm a short-term trader. If I had this position, my hands would be itching to cover the short position and look for something else, because it fell on the weekly chart. The stock fell through the value zone. Fantastic. And it does have room to go to the target level. Very good. But if you look at the daily chart, last 3 days, it's really holding the lows, or maybe continue to hold, because I'm looking at today's action. It opened low, tried to rally, closed lower. No, I guess it's okay to continue to hold this short. There's always, they say, fast dimes. Dime is a 10-cent coin. Fast dimes are better than slow dollars. My style of trading, but it's perfectly legitimate to continue to hold. Very nice trade. Congratulations.
Thank you, Alexander. And from my side, let's say from our side, the book will go to the person who suggested Verizon for this month, and also for those who joined us a little bit later. In the end of this webinar, we'll explain the rules of our contest and about indicators. So I will cover those questions later. So yeah, this is it from a part of our contest. And if you don't mind, we can go back to your screen. And if you have some maybe trades you did like past week or something to share with us, it also will be great.
You know, I'm looking actually at the questions. This guy Darshan is asking, will the trend be down for 2022 or just a part of the year? Thanks. Well, it's going to go to December 2nd of 2022 until about 1 o'clock. You know, I'm joking, of course. The trend is down. You know, how long it will be, it's not possible to tell. It's just simply impossible to tell. And anybody who does that is wasting your time or probably doing some marketing. I cannot tell how long this trend will go down. The trend is down. It's going to take multiple months, that's for sure. Can it take a year? It can. It can. But nobody knows. Let me see. Some people are guessing about the FOMC meeting. You know, it's a guess and nothing else. Bogdan is asking, when you study a chart, how much of a background is sufficient to have a proper study? Well, I like to see three things. First of all, I like to see a very long history, just for a quick look, you know, 10 years history of a stock. And by the way, if a stock is younger than a year, I don't touch it. I don't trade those stocks. I say, this girl is too young, illegal to touch. So you have to have some history there. Quick look at a very long history, just to see where the stock is in its 10-year range. Is it near the top, near the bottom? To study a weekly chart, I would say a year and a half approximately. And to study a daily chart, I would say 5-6 months maybe. Those are my parameters. What are enough signs or indications to tell if we have a good trend reversal? Well, when your slow moving average turns, that's a confirmation that the trend has turned. But you know, if you're a trader, you cannot wait for that. You have to get uncertain, soft signals and protect your position with risk management. You know, that's what you have to do. How to do? Very good question, Marcus asking. How to deal with fear of losing? My best advice is put yourself into handcuffs. Take the size of your account and say, I'm going to risk 0.1% on every trade. Nothing, very little, right? So if you have, let's say, a 100,000 euro account, you're going to risk 100 euros. On a 100,000 euro account, you're going to risk 100 euros. That's the maximum you can lose because of your stock. It's a terrible size. It's a boring size. You cannot make any money with it. And you trade at that size until you make 1,000 euro profit from multiple trades, right? So you're risking 100 euros and picking up a little until you get 1,000 euros profit. Then you bump up your size 50%. So now you can risk not 100 euros, but 150 euros. Do that for a while, then bump it up again 50%. What happens if you do that? You stop worrying about money. You only worry about quality. The money you are risking is so small that financially it doesn't matter. But you know that you have to focus on quality because that's the only way you can get out of your handcuffs or get a little bit bigger, softer handcuffs. You see what I mean? Start trading at a tiny size and earn the way to go up. And that's how you get rid of fear. Done it myself. Question: what moving average numbers are used for short and long on these charts? I don't know. You have to ask Admiral. You know, and I'll add to that that professional traders are usually pretty secretive about their settings. All I can say that you know, one moving average has to be approximately twice as long as the other, but settings you have to play with yourself. Mohammed asking, can we get eldest indicators for MT4? Yes, of course. Talk to Admiral. VZ impulse system, very good comment, actually, very good comment from Secreiro. The impulse system is green on VZ, not allowed to sell short. You're right. The guy anticipated a little bit. The daily system, he anticipated. You're right. You're completely right. The next day, the system turned on the daily chart. If a signal, if a chart pattern is very good, I sometimes ignore the weekly, but never the daily. So yeah, you're right. Very good. Very good, Secreiro. Good vision. Good attention. Let's see. You know, some questions are just leave me speechless. What strategies can you recommend, more sell or buy? You know, all strategies. What they mean? Strategies are all over the place. You have to select what you like. Somebody is asking about short-term patterns. I like looking at a 25-minute chart and a 5-minute chart. That's my precision timing, 25 and 5. Actually, okay. So I think, Roman, I think pretty much my opinion. Secretary asking my opinion on Bitcoin, short or long. I'm no expert on Bitcoin. I mean, I think that Bitcoin is basically king's new clothes. It's just a gambling instrument. I mean, people trade it, of course, and everything, but the whole thing just doesn't make too much sense to me. I'm trying to read the question. Can you explain? Mohammed is asking to explain what happened to the US market. Well, on Monday we had a panic. On Tuesday the panic got softer, and today the panic suddenly people realized they missed the buying opportunity, and so they started buying. You know, most people are behind. They're behind what's happening in the market. The time to sell short was last week. I had 6 short positions coming into Monday. I covered 5 of them in the first 10 minutes of the day. I left one and it bit me in the butt. So you really have to act very fast when you see such thing. And then there was a great buying opportunity on Monday. You know, you can just see the market panicked, fell to a crazy number and stopped falling. So what do you think it's going to do? Fall again? No, it's going to go up next. You know, you kind of have to think about how the crowd behaves. Take advantage of that. Gani is asking, your channels Bollinger Band or Keltner? Keltner, of course. Yeah, Keltner. All right. So Roman, what do we do next?
maybe if you have like some charts from this week or previous week,
Sure.
some examples, if you can share just your thoughts.
Sure. Okay, so let me, let's see, what is this? Share screen. We'll go to the program that I use is TradeStation. That's pretty much the you know, at least it used to be a gold standard for American private traders. Today there's so many other packages which are very good, but TradeStation has been around forever. I'm comfortable with it. I know it. So let's look at a few things. How about this? We start with the weekly chart. By the way, this is how my screen is organized: weekly, daily. So how about this? Netflix. The weekly chart. 1 second. Red. Looking at the daily chart. Looking at the daily chart of Netflix. What does this gap mean? It's a reminder to all of you that before you buy or sell a stock, an American stock, you have to find out when the stock reports earnings. In the US, listed companies report earnings 4 times a year. Those dates are set in advance. There is a calendar, and there is also a website that actually I will ask Roman to show it to you, so I don't jump between screens when we finish. But this is what you need to do before you buy a stock. If you go, let's say Netflix. The chart doesn't look too bad at the right edge, right? We have a MACD histogram bullish divergence. Lines are not divergent. Force index looking pretty good. Hey, why don't we buy Netflix? Well, before we buy Netflix, we should see when the earnings report is due. Wow, good stock, and was trading for $700. Now we can buy it for $500. Yeah, for $500. Well, now you can buy it for under $400. Why? Because earnings came out. Let me give you another example. Another company, F5. It's how about this? Was today. This was today. If you look at this company yesterday, well, you're not allowed to buy it because it's there, but it doesn't look too terrible. It doesn't look too bad. This morning, jump from $220 to under $200. So this is a reminder to all of you: if you're interested in trading American stocks, you have to become very familiar. Well, I should show you this website. Sorry, Roman, I pushed the wrong button. I shouldn't be. Okay, share screen, and where is it? Where is it? In any case, Roman, I will ask. I'll probably ask you to share. You know,
I can share if you want.
Yeah, maybe take over the control and show them. Okay, so okay. So you see it here. So Roman, show the top of the screen so that people can recognize it when they actually go looking for it. You see Finviz. You see this website, finviz.com. Very good price, 0. It can be a little bit more if you get the elite version, which allows you to do scanning. But I have an elite version, but for many years I used it as a plain version. So you scroll down, you type in and it says Netflix earnings, January 20th AMC, meaning after market close. Or for example, type in Tesla. Anybody wants to trade Tesla today? TSLA, okay, Tesla. Scroll down. Earnings, January 26, AMC. So it means that today, after the market close, Tesla will announce earnings. They want to buy it before earnings release. They want to sell it short before earnings release. If you're a gambler, go right ahead. But if you're a serious trader and you see something like this, you stay out until the earnings come out, because this is it's a gamble. Earnings can be in your favor or earnings can be against you, and you don't know. So that's why you should be looking at finviz.com before you make any trade in the American stock market. So maybe let me take the control back and show a few charts. Something that where is it? Here. The indicator that I like to use to help me analyze the market is a new high, new low index. The new highs are the leaders of strengths, the new lows are the leaders of weakness. And what you can see here, the weekly chart on the left, daily chart on the right. Weekly chart is red, but daily chart is blue. So daily chart no longer prohibits buying. Prior to this debacle in the stock market, I expected it. I could not tell exactly on what day it will come or how deep it will be, but the sign was here. The new high, new low index measures the number of new highs, the leaders in strengths, and against the number of new lows, the leaders in weakness. In March of last year, the weekly new high, new low index was about 3,300 at this level. In September, October, it was 1,600. And then after that, it went below zero. And during this last rally in December, it actually was a negative number. And I was shorting into it, because these diversions meant only one thing. There is no upside leadership. Market is rising out of inertia. So if you want to trade successfully, you have to look for tools and for indicators that not everybody has. And this is there is nothing secret about it. This is in public domain, but you have to reach out and do research in a serious manner, looking at some things that not everybody is watching. To summarize, we had let me compress this chart. We had a gorgeous bull market since March of 2020 until December of last year. The two main drivers of this bull market were the Federal Reserve and the new traders, fresh money coming in. The Federal Reserve, the biggest player, the elephant in the room, is out of this game now. They are on the way out, and they're taking their money with them. And so that's why I expect this bull market, well, the bull market is finished. It's been finished for a while now. I expect a bear market ahead of us. And we can see real fireworks on the way down when people like you get hit with margin calls. And that's when we're going to see more 1,000 Dow points a day days. It's the margin calls that are going to drive the markets sharply and sharply lower. But I don't think it's happening this week. I think the market had a big scare. It survived that scare. And now we're likely to have something like here in the middle of the chart happened in September. A sharp decline, a rally of a few days, and then a slow grind back, and then another rally uplift, except it's not going to be as high as it was then. So be very careful. be sure you control your risk. Something from what Roman started today. Trading is risky, and when you're trading, you should absolutely figure out how much money you're planning to risk and how much you're planning to gain, and stick to the plan. I shared with you my method. I call it the friendly handcuff method. If you're afraid, if you're nervous, sharply reduce your size and trade at a boring small size and earn the right step by step to increase your trading size. My best advice to you. Thank you very much, and thank you, Roman.
Thank you, Alexander. It was great, as usual, to see you this month. Also, we'll be excited to wait for a next session, which we will have in February. And Happy New Year. I didn't have a chance to say it also, as it's our first webinar.
Happy New Year to you also. But we're coming into Chinese New Year, so we can celebrate the Chinese New Year in the beginning of February.
Yeah, true. And for our participants, thank you, Alexander. Next, I will explain our contest rules and about indicators. I don't want to spend your time. So see you on
after Chinese New Year. After Chinese New Year.
Yes. See you next webinar. Thank you. And for our participants, I will also share my screen to explain our contest rules and also how to get Alexander's indicators. First of all, I want to say that our webinar will be uploaded to our YouTube channel. So to participate in our contest, you need to subscribe this channel, and I will send it right now. So just to give you a chance to subscribe to our channel. So this is YouTube channel and also our Telegram channel. So where you will be notified about our next sessions. And first about indicators. So we have elderdisk for our MT5 platform, which available for our clients. So first of all, to get a request for those indicators, you need to send an email to elderdisk@admiralmarkets.com. So here's the email, so you can copy paste and send it with the subject Alexander or Alexander Elder indicators, for example. This package available for our clients, for Admirals clients, with a balance more than 200 euro. So you can, of course, practice like on them on a demo account, but it will work on a real account with balance with more than 200 euro. And when you send a request, we provide to you indicators, chart templates, video tutorial how to set up it, and also when you participate our webinars or watch it in a recorded version, you can learn step by step how to trade as Alexander do, and also you can ask every time question. So if you want to check how this indicators works for you, you can send a request and we will send it back to you. And also the next thing, the last but not least, is our contest. So during this contest, we provide a chance to win a book with Alexander's Elder signature, and to participate, let's say this is gentleman contest. So we think that our participant can earn more like on real trades, but here also we provide a chance where you can win this book. So what you need to do to participate in our contest? So first, to subscribe our YouTube channel. I will share it one more time. Here it is. Then you need to like the latest video. So the video with a recording of today's webinar, so it will be uploaded tomorrow. So you can start your participation tomorrow. You need to suggest one trade for the one asset which can be traded in Admirals. So you can, of course, you can use US market or European market or currency. So all instruments you want, which you can find in our platform. So you can check them on our website. But we cover a lot of instruments. But previously you can also check. In this contest, what you need to suggest, like in comments under this video, you need to suggest entry price, stop loss price, take profit price, and date of post when you made this post. So 4 main parameters. When you can check this trade with Alexander indicators or with your own approach, it doesn't matter. But here the winner, so we we give preference to those which trade is closed via take profit. And of course, like for example, for today we had a position which is still open, which is bringing to our winner at least around 2%. And of course, this position should be triggered in between our webinars. So between 27th of January till 16th of February, when so we will have our next webinar the day after, on the same day, like on 16th of February. And of course, the main thing, the last but not least, it is prohibited to edit the comments, because it in YouTube comments you can see like when it was made and if it was edited or not. So when you suggest your trade, just think about position. So it can be in the middle of the month, at the beginning of the month, and then we will choose the winner as you saw we did during this webinar. And also what I suggest you to do, also to try to think about questions, and also leave your questions under this YouTube video, because sometimes it's not we are overtiming, and sometimes it's a lot of questions are coming, and as you saw, we didn't have chance like to cover all questions which came through the chart, but those questions which we got in our YouTube channel under this video, we will look at them for first, and then or if you will have time, we'll go back to our chat and Zoom and cover those questions. So yeah, this is it. If you have any questions, you can also leave them under this video, and the next webinar will be in the middle of February. So prepare your questions, prepare your instruments for a contest, be active, and I wish all you to like win this book one day, because we have this contest every month. And yeah, this is it from our side. It was Admirals. My name is Roman, and I was happy to be a co-host for Alexander for today's webinar. So see you next time, and have a great year. I already want to say like months, but it's the beginning of the year. So have a great year. Thank you.